Eric Mwathe, Mwathe.com. I would like to respond to your email question by way of video. And so let's take a look at MATX. The question was whether we could draw a uniformity line connecting these highs here. It would be something like that, and maybe look something like that. And from this example, you can see it does make a little bit of sense, but I'll explain to you why it's not the best way of doing it. Well, one, there was a breakout here which began this breakout attempt. So yes, you can draw it there, and I think it also makes sense. Just quickly here, you can see uniformity below the blue line, back above it. There was a nice re-entry in the market. It would touch it here, which was this low, for a nice move higher. We see uniform activity below the line, back above it, which is somewhere over re-entry here. But you can see the moves are not as successful because the stock eventually does not move as much or does not bounce with great authority. And we see another one here, uniform activity below the blue line and back above it. So that's one way of drawing it. But when you're drawing a uniformity line, and this is important, is you want to find where the move began. So we can see that there's a low here, and this is where we have a nice move higher. So ideally, this is what you're looking for. The uniformity lines are there to tell you when the stock started an ideal move. You just don't want to draw it based on, say, a short-term low. Like for example, we wouldn't start looking for uniformity based on these lows here, because the ideal low before a nice move was here, and we had a nice continuous move higher. So when you're drawing the uniformity line, you always want to go to where the move began as best as you can. And on this example, there is this line here connecting the previous highs. There's one way of doing it. Remember, there's no hard rule necessarily. So this line connecting all this and small node there was the entry level with a breakout here, and that breakout was the stock moving higher here. Since then, we see that the stock has gone on to record nice highs from about 26 all the way to about 43, and the uniformity line on that one is around the 50 level. You can see now that it is a better rebound area, because whenever it comes here with uniform activity, we get nice lows in the stock. Uniform activity below the green line, back above it for successful move higher. Uniform activity to the line, back above it for successful move higher. And also here we see this twice. It's hit that level, and each time it has moved higher without making fresh lows. So that would be where you would draw your first uniformity line. And so yes, the stock has already bounced. If you are looking for a rebound on this one, the uniformity already took place here, as it has bounced below the green line and back above it recently. So that's one view. There's another view, which is you can draw this and get another uniformity line, which is here, and this break, this level here, corresponds with this nice entry. Remember, the other line corresponded with a move from somewhere here. This one is giving us an even earlier entry. So in reality, this is also a legitimate uniformity line level. So down the road, if the stock ever comes back to this line, the green, this lower uniformity line, if it ever comes to this level and shows uniformity, that is where you can go long. So in terms of drawing the lines, the two lines that I drew, this line and this one here, offer you two opportunities at drawing uniformity lines, and the market has chose to use the top one. So the market has used this. It hasn't used the lower uniformity line as of right now. Maybe down the road, months down the road, it could do so. Now if you take a look at the stock here, we see that it is breaking out on the monthly above previous monthly closing highs there, and I do believe the price there was at 41.99, we just call it 42, which is the previous monthly closing high. Stock is showing very good momentum, with the MACD trading already above 69.1, And we can also see, with the RSI trading above 69.1, not the MACD. And the MACD here is, as of right now, at highs. So already trading at fresh highs on both MACD. So the stock is primed to move. We talked about the sector. It's in the, you found that it is in a good transportation sector that is doing well. So kudos to you for finding a good stock in a good sector, because you always want to buy a leadership theme. And you mentioned buying the stock based on 5-minute chart. So let's take a look at the 5-minute chart, and you can see on the 5-minute, this is the lowest entry on this 5-minute chart going back about 10 days, I believe, something of that range. And there's a breakout here in the RSI that corresponds with this price move from these lows. Why is that successful? Because since then the stock has gone on to record higher highs. So from this chart, this is the ideal. If you had gone long here by mistake, that's where you would have made the most amount of money. So that's ideal. So again, we find the ideal entry point, which is somewhere here, and we draw a line like that. That's where the move began, which is here, and we draw our uniformity line like that. You can see that the market has been using that level for a bounce. Every time the stock comes here and bounces, we see the market move higher, double bottom here for these lows. And so if you are waiting to time it on a 5-minute chart, this is where it will support right here. So yes, buying it at about 42.80, which is somewhere around there. Let's call it just slightly under 43 was your entry. I think that's a good entry price, because you bought it on a 5-minute chart. Just before you buy, you always want to look at the 5-minute to see whether you're getting a good price in terms of support on the 5-minute RSI chart. So this one is, to me, a good entry based on the breakout on the monthly, and you time this on the 5-minute chart. I say that's a great timing opportunity. Now we see whether the market is going to respond, and the stock is going to respond by moving higher after seeing this uniformity support action. And so after that purchase just under $43, all you need to do is set a stop, and I would encourage this to be a mental stop, maybe 5%. You don't want to go more than 8%, but I would encourage you want this to be a mental stop, because if you put a hard stop and the market can see this, the market has a funny way of coming and taking your stops out and just continuing on with its journey. So you'd rather use, if you can stick to the discipline, if you see your stock down 5%, you know it's time to get out. But the problem with setting a hard stop, the market makers can see that, the market softwares, the robots can see that. They'll come and peg your stop, and you'll be out of a probably good position. So I would go with mental stops. The challenge there is, now can you be disciplined enough to execute the stop loss whenever you see yourself down, let's say 4.5%, would you get ready to sell at 5? That's the challenge. It might seem very easy in theory, but the reality is that we all struggle with that idea of executing losing position, because just at the point of selling, we always get this idea that the stock is just about to start moving back. So that's the challenge. And again, problem is, you set hard stops, the market will just take it out. All right, so that would be, and I know to your question whether I use the average true range to get out of a position, no, I don't use any other calculation other than to know that 5% is the maximum stop loss. All right, let's take a look at the other part of the question, which is, how would you draw this uniformity line for this chart, LUV? And we can see that even if we go back to the recent lows here, which were very successful, we can see that the stock had a nice run. And so that's the ideal entry. If you made a mistake of going long here, you saw a good return almost immediately. So we can see that that corresponds with this RSI move here. And so a simple straight line from there, and you did correctly point this out, that this is the uniformity line where the market has been bouncing on the stock. And you can see here also recently, here, and now here. One key thing to notice is, now we are seeing improving technicals, improving lower lows on the RSI, or improving higher lows. The RSI is making lower higher lows, while the market's making lower lows. and that could be also another reason for why the stock should be looked upon as a potential rebound candidate. Number one, uniformity, and number two, we see that we are seeing a nice positive divergence here, and that corresponds with our uniformity line coming there. So yes, it looks like this is where anybody looking to go long should go long based on that. The other stock that I'd questioned you about the drawing the uniformity line, a couple of ways to draw this is, number one, you can see that, and you are right, that you can draw a uniformity line this way based off this entry in the RSI, which is off these lows, and those lows on a short-term basis was successful in moving the stock higher. We draw a uniformity line from there, and we see that the stock has been bouncing on the line, as you can see here, nicely giving you and traders nice entry levels. Now we see that it is moved below the line and back above it. And let me draw that line again so I can make it a little bit narrower. So this is the line, should be somewhere there, and the stock has already gone below the line and back above it. This action here looks something, if I can simulate that, it went down, up, and something like that. So this is what it looks like here, and you can see that. So now this should be the green line. Oops, it should be the green line right there, and it is uniform action is what I'm getting at. It is below the green line. That's a uniform action, and now it's bouncing on the uniform action. So I would look at this as support, suggesting that this is where the stock should see some love, and maybe the RSI now is going to stay. As long as the RSI stays above the green line, we should expect prices to move higher. So anybody who was looking to go long should have gone long based on that uniformity support. Now that's one view. I want to show you the best way of drawing this, because remember, we always want to find the best move. And so this is 1 year daily, and now this is 1 year plus 3 months. So we're talking about 15 months daily chart. Why? Because I was looking for the ideal entry point. Ideal entry point on this stock was during these lows here, and it went on a nice run. So now we know that that movement began with the RSI breaking above this level here. So we draw that line connecting highs. We see where the breakout on hindsight took place, which is here. Draw a line from there, which should be that way. And you can see now here, we see that this is perfect. It shows uniformity here, nice lows, uniformity here, nice lows, came close here with uniformity, nice lows, and now we've gone below the line and back above it. No questions about that. So if that's the case, then this is the ideal uniformity line, showing you that this is the entry level there. Hope that makes sense. So you need to find, when drawing uniformity line, the ideal entry point, and it is here. You have to go back more than 1 year to find that entry, and the stock has given you a nice uniformity line, which is where one would go long. Now you asked the question, so I'm going to go back to the 1 year daily as to whether you could draw a uniformity line from here, this way, connecting to the highs, recent highs, and of course the answer is no. Why? Because uniformity lines are based on ideal entries or ideal sell points in a stock. So this would make no sense, because it is not relating to any, what do I call it, any major move in a stock. We haven't seen that. Maybe down the road, 6 months, 9 months down the road, this is going to be a nice entry. The stock bounces higher, and maybe in 9 months it's going to be trading at $300. We'll look back and say this was a nice entry. Maybe, who knows? So that would not make sense for now for us to use this, because this is not relevant. It doesn't give us an entry point. Now maybe what you can say is, and we don't know this for now, is maybe this recent break point of the highs could become a problem down the road. So because you can see that this break off the highs, it's still early on, we don't know how much of this is going to be a problem for the stock. After that break, if you draw a uniformity line, something like that, you can see this has become resistance short term. But that's going away from the question of the uniformity for a bounce. So this is but it's the same principle. We find where the break took place, draw a line. In this case, the uniformity line would be somewhere here for the sell signal. So no, we cannot use this high, or we cannot use this line for uniformity, because we need to know on hindsight where the move began. And you can see we can either use this move, or we can use, so we can either use this entry here as we had discussed earlier for a nice move, or we can go back to the 15-month daily to get the other entry point. So to answer your question, no, there's no way, there's no reason, there's no point in drawing a line here for uniformity, because that is not based on a strong move in a stock. We haven't seen that yet. Just like back in the day during this move here, you would have not used this line because you didn't know that it was going to be successful. Hope that makes sense. We only use uniformity lines based on previous. The uniformity line is there to give us a story, and the story here is that this is where this move began and it went higher. That's the story. And so we use a line from that to give us an entry. Hope that makes sense. So when a stock is telling a story, then we can use that. Otherwise, like on this 15-month daily chart, the story is that this is where the lows was and it moved higher. So we use that by finding the entry, which is somewhere here, and we draw a simple line from there, like that. And it gives us a story, because now we can see that yes, the market is responding every time it comes to the uniformity line here, and recently below the line, back above it. So that's how I would draw the uniformity line, and that's the correct way of drawing the uniformity line. Otherwise, you did get those correct, just wanted to polish up on a few things. Otherwise, have a good day, Eric Mwatha. Good luck, peace, and blessings. O-E-A-C-S.